how do we record the transaction using the accounting equation approach? Using the accounting equation approach. Right. Accounting equation is nothing but capital plus liability is equal to asset. We have n number of different varieties of assets. Write it down, all these things one after one in columnar form. Capital and liabilities will also have n number of forms. Creditors, bank borrowings, like n number of liabilities we may have. Assets, land and building, plant and machinery, stocks, debtors, like n number of assets we have. Now, if for every transaction there will be an impact. There will be impact in two accounts. One will have plus, another one will have minus or plus. Okay, that's how. Either one asset will increase, another asset will decrease. If I purchase a land and building by using the cash, the asset land and building is increasing its value. The cash balance of ours will be decreasing. One plus or one minus. Or asset increases, but I have not paid money. Then automatically what happens if I am not paying? Then I am supposed to pay to the person who sold it. So the liability increases. The seller's value will be in credit. That will be increasing. So either it will increase and decrease in asset itself, or it will increase and increase in asset as well as the other side will also be possible. This will be called as one side. This will be called as another side. Right. This is how you can understand. There may be income and expenses also. Whatever the income and expenses may be, or profit and loss may be, these things will be addable or subtracted from the capital only. If rent is paid, cannot be recorded anywhere, it will be subtracted from the cash, capital. So expenses is subtracting item from the capital. If there is an income, that will be addable item with the capital. That's the logic you have to understand. Anyhow, with an example, we'll see this. For example, Rohit started business with a capital of rupees 5 lakhs. 5 lakhs from the accounting point of view. From the accounting point of view. Right. So started capital 5 lakhs means the business will get 5 lakhs rupees. For that, the business is liable to pay or return it to the owner. Amount supposed to be returnable to the owner is named as liability. Named as liability or capital. That will be capital in sense. So I'll do this way. Capital and liability. Okay. Capital and liability. Okay. Capital and liability. Then assets. In assets we have n number of items. N number of items. We are aware about that capital plus liability should be equivalent to asset. Should be equivalent to asset, right? Capital plus liability should be equivalent to asset. From the very first transaction, we are aware about that 5 lakhs comes to the business. You are going to account for the business. Right? So in business angle, whether the money comes in or goes out, it comes in. So it's an asset comes in. That will be named as cash. Cash is also an asset. So in asset, I name this being cash. The value being, means the asset being cash. Okay. Cash. What is the value? 500,000. I put all the values in thousands, removing 30. By default, you can understand. 500,000. And as I already told you, capital plus liability should be equivalent to asset, right? So here in the asset side 500, then parallel 500 should be where? This is the amount given by the owner. As the amount given by the owner, now the business is liable to the owner, then it's coming in the liability side. If the business is liable to the owner, then it is called capital. If the business is liable to third party, then it is called liability. So I'll put that value here, capital being 500. What is the liability? We don't have any liability. Now it's matching. Cross verify whether the assets is equal to the liabilities or not, one after one. Yeah, of course it's matching. It's matching. Here in example number 1, opened a bank account in State Bank of India with an amount of rupees 4,80,000. Now what happens? We have deposited the money in this SBI account. If I deposit in the bank account, what does it mean? Also asset for me, right? You can have the cash in your pocket or you can keep the money in the bank account. So both are your amount. So it is an asset. You can enjoy the benefits the next year also, right? So now I am introducing one more asset here, bank. Bank. Because of the second transaction, I deposit 480,000 rupees into the bank. Bank balance now shows 480. What happens in your cash box? In your cash box could have been subtracted to that extent. Now your cash box will have only 20. So in asset side, one asset is decreasing, another asset is increasing. In the liability side, we don't have any adjustments. I will just write as it is. So capital being 500, liability being 0. It gets closed. 500 plus 0 is equal to 20 plus 480. Now the second one. Okay. Now this is the second one. This is the base transaction. This is the first transaction. Now in the second one, what happens? Bought furniture for rupees 60 and check was issued on the same date. Furniture is purchased. The furniture is an asset, a new asset. You can enjoy the benefit for more than 1 year. Then it will be in the right hand side. Asset side. I will introduce one more column here, furniture. I purchased the furniture by paying 60. So now in my office I have 60,000 rupees worth asset newly purchased. For then the payment is made by what? The payment is made by check. This means the bank balance could have been reduced to that extent. Now I am going to subtract that. So 480 minus 60, it is now 420. What about the cash? It remains unaffected because of the transaction. So each and every transaction will have impact on two accounts. Mind that after the two accounts, you don't disturb other account, right? Is equal to 500 and 0. Now you can verify whether the debit is equal to, means whether the capital plus liabilities is equal to asset. That equation should always be maintained perfectly. Third one, bought plant and machinery for the business for rupees 1,25,000 and then advance of rupees 10,000 in cash is paid to Mrs. Ramji Lal. So a new plant and machinery is purchased for that 1,25,000 rupees worth is also finalized. So I am introducing one more asset, plant and machinery. Plant and machinery. Okay. Third transaction. The plant and machinery worth being 125,000. But I have not paid completely. Only an advance amount is paid, which is 10,000 rupees. That too in the form of cash. Then the other impact will be where the cash balance might have been reduced. So you have to subtract from there. So from 20, I have to subtract 10,000 rupees. So now the cash balance is only 10. For 125 rupees, I paid only 10. I paid only 10. What about the remaining 115? I am liable to pay later. So a new liability comes in. A new liability comes in. So you have to now record that as a liability. If you are going for a shopping nearby your home, probably a petty shop like to purchase a soap or something for the emergency, you went there and after purchasing only realized you kept your purse in your home. What happens then? What happens then? Okay, you are regularly purchasing that. That shopkeeper says that no need to worry about. You no need to worry about that. You can leave it. So come the next date and pay. So you come to your home and then realize that name should be in your mind because you have to pay it. That shop owner will keep your name in his mind. So the person's name in your mind is possible only if there is any due. Either due receivable or payable, it will be kept in your mind. Is that clear? Similarly, 125 rupees worth of plant and machinery is purchased where I paid 10 rupees cash. Remaining 150 is pending. Pending means immediately I have to remember that person's name. That person is liable for liability here. Okay. named as creditor. Named as creditor. Okay, creditor is the person to whom I am liable or I supposed to pay. Debtor is the person from whom I am receivable later. Okay, understand now. The creditor is the common term to whom I have to pay will be the creditor. The person from whom I have to receive, which is a term which is termed as debtors, which is a common name. Right. Let me move on to the fourth transaction. Goods purchased from Mrs. Sumit Traders for rupees 55,000. Goods purchased. So goods is a new item comes here as said, and 55,000 I assume it is paid out of. Okay, name is given. Name is given whether it is a cash payment or cash purchase or credit purchase. That detail is silent. If that detail is silent and then the name of the party to from whom you have purchased or to whom you have sold, then it is always assumed to be credit transaction. Credit transaction. Is that okay? Now a new account comes here, which is goods asset. Goods is nothing but stock. When I use the term goods, it represents I am purchasing for selling with a profit. In that case, it is called goods. Otherwise, that will be named its own name. For example, in Singar Academy, to maintain all the accounts and other things, we will purchase a stationery. What is the intention of purchasing stationery? For our requirement, consumables. I consume for our requirement, then it's called consumable. It will be named as stationery. Okay. Now, if I purchase a printer, why do I purchase a printer? Because I'm going to use the printer for printing our requirement. Then it is an asset. So, stationery, printer. Stationery will have short life. Then it is an expenses. Printer has long life, so asset. But if I'm being the stationery mart owner, I'm doing the stationery business. Muthu paper mart here, like I'm purchasing the stationery and selling the stationery. When I purchase the stationery, they will not call that being the stationery. They will call that being goods. They will call that being goods. Okay. And when the computer shop purchases the printer, they will call that as goods. Okay. The computer is purchased for selling after a margin, right? So whenever I purchase not for our purpose or my consumption, my requirement purpose, but for selling to make a profit, then it is called either purchases or sales. In general, we call that as being the goods. So whatever the goods may be, for Singar Academy, what could be the goods? Right. For the stationery mart, stationery is the goods. Right. For the stationery mart, furniture is an asset. For the furniture mart, stationery is consumable. Stationery is the goods, because furniture mart purchases the furniture and sells the furniture for a margin, for a profit. Then purchasing the furniture is named as goods. Purchasing the stationery by the furniture mart is going to be consumed by them, so it's named as stationery only, and that too the stationery has benefit for a short period, then expenses. So fourth one is over. Okay. So I had to write that fourth one. Sorry. So goods comes in. I have to now add the goods here with the value being 55,000, but I have not made any payment. I will now add that with the creditors. To the party I have to pay. So already I knew that I have to pay 115. Now I have purchased from Sumit Traders. You can now classify this way also, Sumit Traders. One more liability is also you can add. In liability you have creditors for the asset. Another one is Sumit Traders is also one of the liability. To whom I have to pay is 55 rupees. Rest of the things are the same. No change in capital. No change in creditors for asset 115. Now we get a new creditors 55. These three put together will be the liabilities and capital. In the asset side, no change in cash, no change in bank balance, no change in furniture, no change in plant and machinery. Goods comes as a new item. The last component here, goods costing 25,000 sold to Ranjani Enterprises for rupees 35,000. Now it's a sale. It's a sale. Then sale should be having the impact on goods, right? Let's see here. Ranjani Enterprises. If the name is given without the particulars related to whether it's a cash transaction or credit transaction. Cash transaction means I am selling the goods and getting the money immediately is called cash. selling the goods, but I will collect the due later, then it's called credit transaction. When it is a credit transaction, party name will be recorded. What should be taken? Party's name should be taken. So here Ranjani's name should be taken. Now, for the fifth transaction, goods costing 25,000 sold, then how much of your goods will be decreased? Actually, you thought 55 rupees worth of goods you purchased and kept, out of which 25,000 rupees worth of goods were sold to Ranjani Enterprises. Thereafter, the 55 is now reduced to 20. And because of that, Ranjani has to pay us how much? 35. So, 25 rupees worth of stock, by adding 10 rupees profit, sold to Ranjani. Now Ranjani is our debtor is our asset. I'll just put that being R. R has to pay me 35,000 rupees. Stock decreases by how much? Stock decreases by 25, and I sold to Ranjani stating that, sir, you have to pay me 35. So Ranjani has to pay me 35. So now new account, Ranjani comes with 35,000 rupees. My stock decreases by 25,000. Is that okay? Now what happens to the difference? 10 rupees. Whatever the difference between the purchased price and sale price will be your profit and loss. That profit and loss will be adjusted in the capital account. Any receipts or payment being expenses and income or loss or profit should be adjusted only capital. The very earlier illustration I have guided here. Either it may be income or expenses. If it is being income, it will be addable with the capital. If it is being expenses, it will be subtracted. In the case of profit, it should also be addable with the capital, and in the case of loss, it should be subtracted. Here, because of this transaction, the owner gets 10,000 rupees benefit. That's why owner has invested the money here, right? Because of this operation, what is he is going to get? He is going to get only the benefit out of which the benefit is nothing but this 10. So now the balance 500 becomes 510. Owner's capital is increased, plus the amount payable to the creditor from whom we have purchased the asset is 115. There is no any change, and then Sumit trader remains the same, 55. Okay, the total of the capital and liabilities put together, liability side named as liability side, is how much? 680. Am I right? 680,000 rupees. In the asset side, no change in cash, no change in bank, no change in furniture, no change in plant and machinery. By adding all these items, you have to verify whether it's matching with 680. So this will be the final balance sheet. This will be the final balance sheet. Is that okay? This will be the final balance sheet. Good, sir?
30. 25 reduced and 30.
Okay. So goods being 30, I'll just stand corrected here. This is not 20. This is 30. I had to subtract 25, then it's 30. Now, are you able to verify this? Is it matching? So now it's matching. This is called accounting equation approach. Whatever the transaction may be, in your layman's understanding, I already told you, no, your day-to-day expenses also, you can make a note of it. You get around 5,000 rupees or 10,000 rupees from your parents if you are staying away from your home in hostel. You maintain that 10,000 rupees, you start spend the money for hostel rent and food, accommodation, any emergency expenses from there. You are maintaining the account the same way I am maintaining here also for a business. That's all. We don't have any other logic beyond that. Simple logic I have already explained in detail, right? Let's see here. This is the way of presentation balance sheet. All the liabilities will be kept in the left hand side as the liabilities. Assets will be kept in the right hand side as assets, right? So we already got 6,80,000 rupees. 680 in thousands we arrived at, but it's a systematic presentation. The presentation will be this way only. Balance sheet as at this date. As at okay. Remember this is whenever the balance sheet is there, it will be representing the value only for a particular date. The next date, one transaction will be there, automatically the balance sheet will get affected. So this is nothing but the balance sheet as on the first transaction. This is the balance sheet as on the second transaction. This is the balance sheet as on the third transaction. Combinedly, I will be verifying and finding the balance sheet only for the year end as on 31st March, the financial year end. As on the financial year end, this date, we have so much of liabilities. Liabilities, no, they have grouped that as outsiders claim. The outsiders claim is these two, 115 and 55. They have grouped this in single number, the value being 170, but I have individualized that. Right. In the asset side, we have all these elements already open in a columnar form. But the proper presentation of the balance sheet is this one, but it is prepared once in every year. Is that okay? Come on, make a note of it.